basics, the key to getting things right, understanding business and market dynamics. Our moderator for this panel has over 16 years of experience in corporate finance and consulting across a wide range of industries, while he has been focusing on real estate for the last 8 years. Prior to joining India Bulls Asset Management, he was a managing director with JLL, where he was responsible for asset dispositions, sale and leasebacks, real estate financing, advisory on joint ventures, and capital raising. Please join me in welcoming CEO, Private Equity Funds India Bulls Asset Management Company Limited, Mr. Ambar Maheshwari, MRICS. Joining him on the panel he is currently the Chief Executive of DTZ's business in India. His career in real estate spans over 20 years across a spectrum of services from corporate real estate, valuations, advisory to investment businesses. Under his leadership, DTZ in India transformed from a startup to an established business known for its leadership and service delivery for its clients. He is well known as a thought leader, having interacted, addressed, and advised management committees across geographies in the real estate sector. Please welcome, he is already here on stage, Mr. Anshul Jain, FRICS, Chief Executive India, DTZ. As the group chairman, the next member of this panel has been a core pillar of ASF Group's successful growth journey in the last decade. It has been his foresight and futuristic vision in offering his customers the concept of boutique construction in such diverse areas as commercial, residential, and recreational complexes that have created a platform for the group and set him apart from other real estate players. Here he is, Mr. Anil Saraf, FRICS, Chairman, ASF Group. Our next panelist has nearly 20 years of work experience, of which in the last 16 years as a real estate professional, he has successfully structured several joint ventures, done private equity placements, advised several funds and HNIs on their investments in real estate. As head real estate at GVK for Mumbai International Airport, he is responsible for land development and asset monetization of the entire city-side commercial real estate. Please welcome Mr. Hardeep Dayal, MRICS, Head Real Estate, GVK. Based in Mumbai, our next panelist has been heading Xander's credit platform in India since 2012. He brings with him over 15 years of investment banking experience and has worked on several marquee M&A and private equity transactions, IPOs, and follow-on equity offerings, as well as project and structured finance transactions. He has also led corporate restructuring and advisory assignments for leading real estate and infrastructure groups. Please welcome Mr. Amar Mirani, MRICS, CEO, Xander Finance Private Limited. As Vice Chairman of Lotus Greens, our next panelist is responsible for giving direction on the overall business strategy and key investment decisions of the firm. Being one of the founding members of the company, he has been instrumental in formulating various company policies, setting up systems and processes, and building a strong team of professionals. He has more than 20 years of work experience and has worked with some of India's largest and most respected real estate companies like JLL and DLF. Please welcome Mr. P. Sahil, MRICS, Vice Chairman, Lotus Greens. The final member of this panel promoted Liaisons for Us as a completely non-brokerage real estate research outfit. His studies and works, particularly in the field of valuation, risk assessment, and future forecasting model of locality development and price behavior, have been acclaimed within the industry. His firm monitors the performances of over 15,000 projects across 25 cities in India and provides research and risk advisory to HFCs, banks, developers, and funds. Please welcome Mr. Pankaj Kapoor, MRICS, founder and MD, Liaisons for Us, Real Estate Rating and Research Private Limited. With that, I hand the floor over to Mr. Maheshwari, who will take us through the next 40 to 45 minutes.
Thank you very much. Good morning, everybody. So the panel is, the discussion that we're going to have today is about knowing the basics, know the basics, getting it right. Quite a generic sort of a topic, and I think timely as well. It's been a little over a year that the new government has been in power with the mandate that it's got. Probably, actually not probably, it's a fact, the most stable central government over the last 30 years. What we're looking to do today is discuss and debate around this panel on what the government has achieved so far, what are the things that they've done which impacted the real estate industry positively or negatively, and very briefly on what are the things that we're looking at as an industry as well going forward from the government. A significant tenor is remaining, and I think now is the time where we need to take a little bit of stock on how things have panned out and what are the things that one is looking at. I think it's a fantastic panel here. We've got developers, we've got research, so Pankaj, we're really looking at a whole lot of insights from you on what the market is, how is it behaving, and so forth. We've got people who look after infrastructure, an international property consultant, so people who have a bit of an overview on what's happening around and how things are panning out. So my first question, really, Anshul, if I can take this up with you. Over 1 year with the government, we started out with a whole lot of hope, a lot of promise that the government came through with the mandate that it did. We were all hoping that things will change. We're still hoping things will change very, very quickly. Has the change to expectations of people, the impact that we've seen on real estate, what sort of impact do you see going forward as well? If you could, lead with this.
I guess the expectation is always unrealistic, I'd say, and even while leading a small firm, I know how difficult it is to change things within a year when you're dealing with perhaps a handful of people. And here we're talking about a country which probably is one of the most complicated cases in the world, right? So that's my 2 lines of defense for the government. I think overall, from a policy perspective and at an extremely macro level, all the initiatives that's been started by the government, whether it starts with the financial inclusion program, program around health, cleanliness, program around Make in India, program around just getting the image of India up around the world, I think it's been fantastic. And first things first, you got to get money, right? And clearly, from the various bilateral talks, some figures float around that there's been pledge of 20 billion plus in investments, and that's what we need. So I think it's been a good start. Clearly, there are lacunae in terms of following up on those policies and how do you sort of implement. So how do you actually implement Swachh Bharat? It's one thing to talk about it, but when you go around cities, I'm sure, I don't, and I'm sure you don't see any real visibility of that Swachh Bharat happening. But as I said, I'm willing to be patient, and I'm willing to give this some time. I look into the real estate sector, and I'd much rather be in 2015 than in 2013, right? Or 2012. I remember how things were in 2012, 2013. From a commercial sector, the sector's doing extremely well. To give you some numbers, 2013, the absorption was about 25 million square foot. Last year, we absorbed about 35. This year, we may get in close to 40 million square foot. That's huge uptick in commercial demand. If you look at private equity investment, and these are some secondary figures, I'm quoting figures from secondary research. The first 6 months of last year, apparently 4,000 crores of private equity was, in fact, today's Economic Times state that 4,000 crore of private equity came into real estate as compared to some 11,000 crores in the first half of this year. So from my perspective, from a business perspective, things are looking up. And I think we just got to have patience.
Great, thank you very much. I'd rather be in 2015 than 2013. Hardeep, you are in a very, very unique position, middle of all the action, infrastructure and real estate around infrastructure. Do you agree So, 2013 versus 2015, A. B, is this really enough? Has it lived up to your expectations?
Frankly speaking, no. See, there have been, there is, I think so far these 14, 15 months is a missed opportunity. But it's easier probably to sit here and say that, most people would assume, it's easier said than done. But from the industry, and I'm talking about all sectors, slowly you started hearing, that, there are some sounds coming or some noise that, more needs to be done, more needs to be done. So I think at least these 14, 15 months seems to be a missed opportunity. Government did have opportunity to do and make more announcements or do something, but nothing really concrete seems to have happened. And especially infra and real estate, if you see, and if you talk about infra itself, if you, and these numbers were actually being discussed a few days ago at a different conference that I was attending and I was listening, that if you have to kickstart only those projects which were either announced or at least been given a green signal by the previous government, the capitalization requirements additional capitalization requirements was about 5 lakh crores. Recently, the governors has released about 25,000 crores to PSU banks. So that itself is a shortfall of about 4,75,000 crores, plus the new announcement that they're making. We don't know when execution will happen, so that will only add to that number. Where is the money going to come from? Yes, you need the money, you need to bring in the capital, but then you need to create the environment for it. Right now, we don't have that environment. Taxation issues, repatriability issues, that has been playing for last 10 years. So even in the budget, they probably could have done some easing out, but nothing has happened. No announcements also around it. So frankly speaking, and real estate, we all are affected by it. We all know what the situation is. Yes, there are green shoots on office, but 80% of our industry is residential. And real impetus needs to be given there. That's where the crisis of confidence is there. That's where you need to really make the reforms. You have to really, and when you talk to developer side, they all seem to blame the government. That approvals are slow, the cost of capital is high, interest rates are high. But interest rates are cyclical. They will average out over a 5, 10, 15, 20-year period. It is the input costs or the going in costs on day zero which kill a project or make the project. So if you're buying an apartment at 20,000 rupees, it's locked in for life, irrespective of what your interest rate was. So and there is no affordability today. So it has to, I think all stakeholders need to do a little bit at their end and have the realization that, we all need to do our bit to make it happen, but nothing is happening really. So it's policy paralysis and as well as, I think, crisis of confidence. There's a lot of other adjectives you can give, but
It's a lot of negativity. So I have one, I'm glad Anshul is on my right side. So. Pankaj, all of this negativity, but there are some views which are positive as well. Yeah. From a research perspective, if you could give us a little bit of insight on where the market is. From a lot of quarters we hear that office has sort of revived back, and a lot of action in that space. Residential people are still keeling over. There is a lot of expectations that people have from the residential sector. On the ground reality, from a demand-supply perspective, from numbers perspective, you could throw a little bit of light on that.
See, if you look at the market, market actually is moved from the investor cycle to end-user cycle. So even though I hear what Anshul's positivity and Hardeep's little bit of somber look about the market, I see when you are into a transition phase of it, one has to go through it. And I see that the market is moving toward efficiency. Only thing is my dependency cannot be on the investor, which has happened in the last 1 decade. So you look at, we were selling property to the one who were buying third property, fourth property, fifth property, and he was buying the property for his own investment. What has happened during the period that the price setting has created spatial and economic infeasibility. When I say spatial and economic infeasibility, he talked about affordability. Okay, well, the location at which there is a demand for 60 lakhs rupees, the property prices become 120. Okay, and where affordable housing can come in, that is so far away, it does not really interact. So, and the biggest culprit being the land cost. The land has become unviable assets today. They can't even create viable projects, depending upon, and I'm seeing that across India. So, and this is what has happened. So on the data and analytics aspects, whole India, months inventory stands at 41 months, which is, now the 40 months means that my offtake is very low. And there is a very big paradox, which I continue to say, that we are a country where we lay down a policy saying that we need 6 crore more homes in urban India, in rural India, and 2 crore more homes in the urban India. And another side, I am seeing a rising inventory situations, and why it is happening. And it's happening because somewhere my price setting and urban setting is really gone for the toss. My dependency is more on the end investors. Today's market is somber because my investors not participating. End user can't afford. And that's where the situation's little bleak. And I'm seeing it's not a situation only for MMR, NCR, and few large geography. I'm seeing across India, prices have peaked. Some of the geography show a sign of positivity now, largely because last 1 year, price appreciation has stopped. There's a stagnancy. So going forward, like slowly income is improving, interest rates is also softening. So there's an improvement in the affordability. And because of that, you see a gradual improvement. So geography like Pune, it has improved close to 20% on year-on-year basis. What was the situation in 2013? 2014 financial year really shows a good sign. Bangalore has been one such market which has really performed good. And the reason being is that price has been good. You still have 5,000 rupees rate in a location which are habitable. The consumer is interacting. But having said that, those market also seems to have really peaked in the market. I recently culled out the data, and very surprising, this is a market which is IT-driven market. And when I saw some of the data, I found that IT industry employees are just contributing 14% of the sales on yearly basis in this. So what looks like the dependencies in Bangalore also, it looks like more of a self-employed or investor class. Salaried class is finding it difficult to really manage.
So for how long do you, can you just say this 14% number that IT guys are actually contributing, for how long has this been going on? Was the percentage higher earlier?
I do not have, I did not have data to really see the background, and this was like one static data which came in. But it was very surprising to see that a city which is considered to be the most productive realty, and also seeing a very huge dependencies of the investors. And that's where you look at the properties is sold in the pre-launch. Post pre-launch, the velocities drops. But having said that, it is still better than what is the situation of MMR NCR. So most of the cities across India seems to be peaked in terms of prices. We look like, it looks like we moved into a prolonged recession period where we are waiting the affordability to come and people's income increases rather than prices go down. And I don't see there's a scope left. And the reason being cost has increased. So current price is not selling. Prevailing cost is not letting it go down. So the gap is maintained. And then the government also does not want price to undergo corrections. I am talking here, and the way the ready reckoner prices have increased. So if you look at even Mumbai, by virtue of increase in the ready reckoner prices and the fungible FSI and other premium the government has introduced, from 2009 to 2014, the premium which developer pays to the BMC has increased by 400%. And if you take the ready reckoner prices of the land cost and the construction cost, and if I consider my current sales velocity, I can't make one single viable product which gives you positive IRR. That's kind of a scenario in which the realty has really moved in. And my own sense is there's that rising inventory and the weight of inventory suggesting there should be price correction, but I don't see the way the ready reckoner has been raised. And then the government came up with that regulation saying that if the property is sold below the ready reckoner, it will also be termed as income in the hand of the buyer. That means they've created the floor. They won't let the prices to go down. So it's going to be a prolonged correction phase of it. I don't see that the problem is going to be solved so fast in terms of price growth coming back and investors coming back. I'm saying that it's an end user cycle, so there's going to be pain.
My God, thank you, Pankaj. So I've got two developers here. Investors are not coming back to the market because they're not able to churn the property. End users can't afford it. The government is not helping by increasing whatever it is. So Sahil and Anil, I'm going to start with you, Anil. What are the things that you are doing right now to counter the problem that Pankaj just highlighted in very, very astute terms? You've boxed in from everywhere.
Well, you see, as things stand, I completely agree with Pankaj and with his analysis that it's a very difficult phase, and for more reasons than one, including that there is a complete mismatch between the inventory that we hold and the inventory for which the demand exists. So I think predominantly that's from where all this starts, and it trickles down to various aspects which you highlighted. Now, in these difficult times, there is very little that an organization which is already in pain would be able to do, according to me. Because
So let me rephrase. What do you expect someone else to do, whether it's the government or the buyer or,
yeah,
market?
precisely. So you
What
see, as far as the government is concerned, I would look at it I'll also take a slightly detached view. There is very limited which government can do to correct your current day position, according to me. Your pain is today. Whatever government is introducing by way of measures, they would start benefiting you maybe 3, 4, 5 years down the line. And maybe only if we also choose to become a bit more prudent in understanding demographics, in understanding, evaluating that what all would be supported by infrastructure on ground, what all would happen in terms of, for what there is a demand, etc., etc. But our pain is today. So in these situations, I think as a country, we do not believe in cutting the losses. So more than, all these indexes and pricing which government may come up with, I think we are ourselves responsible for jacking up the land prices the way they have jacked up. We kept on mounting, increasing pricing for uptake, increasing, showing a gradual, consistent growth in the price points. And with the result, at the back end, our sellers of land started demanding more and more pound of flesh. Now, that is something which is a reality. So they are not reducing, and that's from where all this starts. So I have not come across a single landowner who is willing to, so much of pain that we hear about, who is willing to reduce on the FSI costs, who is willing to sell his land cheaper than what he was expecting and hoping about 2 years back. Now, you can only reduce on your expenditure, but that too, how far and how much? The world is competitive. If a developer tries to bring down his wage bill, there are enough and more consulting organizations who will be out there to pinch the right talent. And how do you deal with that? So I think we are pretty much in a cesspool, and it's a slightly long haul. But this churning process should make us emerge much more stronger than what we currently are. I don't think we are equipped to handle the current one.
Thank you, Anil. I think, so you agree with Pankaj that it is a prolonged, I don't know if I should still call it recession because I'm really scared of that word.
Yeah, I'm saying
But
there's a correction phase. It's a correction phase. And I do agree. You raise the points of the land. I'm seeing that the land has become unproductive assets. And I think that we have reached to a threshold, and I'm really supporting the cause, that we need more and more land being released. So India has reached to a threshold where India should have a vacant land tax. I am seeing that, there's ample land available, and this ample land has really been supported by a lot of black money also. And that gets parked and remain there unproductive for a period of time. It does not come for development for a long period of time, and that also pushes the urban sprawl bigger and bigger. It's very important for a country like India. And when we sit down and compare ourselves that we would like to be Shanghai or Singapore or UK and US, you need to look at these countries as this particular tax. We
I
need
agree
to make
completely,
our
yeah.
geographies productive.
Yes.
And one more aspect which I would also suggest, because a lot of people from funds who are there, I'm saying that is stop funding for lands, fund for construction. Because the reason is there's so much of money which has gone in for land, that's the only money which has escalated the value of this land, and land is a partial subject. It's like you say that I only fund 10%, we were having discussions. We only, this thing, but that, because it's partial subject, you do an investment of 500 crore rupees in one land in Lower Parel, that creates a new value of land in whole of the city and it spoils the urban economics. Very important, the money actually is needed for construction. Builder does not. If builder's equity is also not involved and you are funding the land and the high price of the land, you create a vicious cycle where the people get stuck with.
I think it's a very Mumbai phenomena, though. You
Yeah.
know.
No, not only Mumbai. Across the India, I'm saying that
Yeah.
this situation is happening.
So great. So vacant land tax, fantastic suggestion. I agree with that, Pankaj, completely. But Sahil, I have a bit of a take on the pricing. Everybody is saying, when Pankaj says or when Anil says that, affordability, end user is not able to afford, investor is not coming back, and so on and so forth. Very honestly, as a lay buyer, I only buy an apartment when the pricing is going up, not when I'm expecting it to come down. So if I were to look at a decision today, I wouldn't buy a house because everybody around me is expecting it to come down. I would wait till the time they come down and then buy it. When do I buy it? When I believe the prices are going to go up, right? So the correction that people are talking about, that prices need to correct, end users cannot afford the apartment and so forth, in my lifetime, very honestly, it's not a new phenomena. I've never been able to afford an apartment where I stay as a professional, very honestly. Never at all. In the last 15 years that I've been earning, I've not been able to afford the apartment where I stay. So what's your take on affordability and the pricing and so forth? Is the pricing really going to come down or should we just,
I think I've heard so much, this lot of negativity also I've heard. First of all, before I answer your question, I want to just say a few things. Sure. I've been talking about India's potential as an economy for a very, very long time. Last 7-8 years, I've been hearing about it. And the only thing I want to say is that, now is a time for us to try and realize the potential. You want to be a Sachin Tendulkar, not a Vinod Kambli. If you know what I'm saying, if all the cricketers, people who have interest in cricket over here would know what I'm saying. Even today, the Asian Development Bank is saying that India is going to lead the growth for whole of Asia. The entire Asian economy is growing at about 6.3%. As per the revised figure, India is going to grow at about 7%. Most of the pundits, economists are saying that India is going to be, the economy to watch out, which is going to lead the economic growth globally in times to come. If you look at BRIC, the most potent in that BRIC is I today. Because, we know what's happening to Brazil, we know what's happening to Russia. China is slowing down. Anshul mentioned about the positivity on the government side. I agree, and to an extent I disagree. I agree because there have been a lot of initiatives. And those initiatives have been announced for the last 2 years, very, very important initiatives. Where I disagree is that, you have to take them to a conclusion. Because, for example, when we talk about various policies, you talk about housing for everyone by 2022. Requires an investment of what, 48,000 crore rupees. Sorry, about $2 trillion, which is the size of our economy today. If you talk about, let's say, the Amrut, which is the new plan, which is the government has initiated, again, 48,000 crore rupees of investment. You talk about smart cities, 50,000 crore rupees of investment. So who's going to pump in that kind of money? Is this going to be a PPP? Is it going to be government investing? So what's the conclusion moving forward? We've talked about the real estate regulatory bill, but at the same time, we also forgot about something that Anshu mentioned this morning. How do you make sure that you have a single window clearance for developers? So on one hand, you're saying that the regulation has to be in place. At the same time, you also need to make sure that it's easier for everybody to get the approvals. We also talk about things like pollution in the city. So today, I keep hearing, and most of you will agree that traveling in Delhi or living in Delhi means you're smoking 18 cigarettes a day. But then where is the incentive that you're providing for people to go and develop green buildings? Again, coming back to Pankaj, he talked about the inventory overhang 41 months. These motherhood statements, they scare the hell out of me. Because they're very bad for sentiments and most of the times they're not true. Sorry, Pankaj. But the reason why I say that is because in real estate, you have to see the relevant supply. You cannot generalize the supply and say, this was of supply and therefore this is the situation of the market. If you pick up the relevant corridors, even in residential today, you'll find that there has been growth. When I say growth, growth can also mean that there is offtake of inventory. We talk about affordability today. The affordability differs for different markets. It depends upon the price living index of various cities. What's affordable in Bombay may not be affordable in Delhi, and so on and so forth. So you have to look at affordability also in that context. But being an NCR developer, I can tell you, if you are able to deliver between 40 lakh rupees to 90 lakh rupees, you will still be able to sell inventory in today's market. And we've shown that in the past. If any one of you want to see the numbers, we can show you the numbers in my office. But having said that, when you talk about affordability and you talk about people looking at buying houses today, I think we have reached the U-shape curve of the real estate cycle. The curve has become painfully long now. Only way it can go is it can go up. Because I think the price at which you are able to sell today is a bare minimum price below which you'll start bleeding. So I think it's a great market for people to go and buy. And there are various pockets across the country where you can find very good deals which will not be available in the next 2-3 years.
Thank you, Sahib.
Can I answer?
Sure, of course, Pankaj.
2-3 points which I always raise, that a country with a housing shortage is dependent upon the sentiments of the people. It's like housing is a basic need. And the sentiments is the one which draws the investors. And I'm talking about 40 lakhs property in NCR is not livable. Consumer can't go and live. And there are also question marks, like there are a lot of property which came in. You look at, if you sit down and analyze, more than 50% of the properties which were launched in the last 4 to 5 years in Delhi actually cannot be end used. People can't go and live, and the reason being why people cannot go and live in those places, because there's no infrastructure, there's no social fabric, and the social fabric requires certain density. So it's not that we sit down and say that the government has not created the infrastructure over there. It's like that I purchased the land and I launched the project. And it's a faraway location. I launched it, I said that it's affordable housing. An investor also in NCR, I'm seeing that they look at 3,000 rupees bracket. Wherever the property is available at 3,000 rupees, they still really, so I agreed that point. But a lot of times it happens, they purchase it, but for investor, the return comes only when the end user comes and buys and lives in that. And that's what is happening in NCR market also. There are a lot of properties which are available, even in the secondary market they are available. But since they're not interacting to the end user, there's a major problem. And inventory overhang also is a barometer. A simple example I'll tell you. We have close to 1,842 million square feet of residential supply, which is under construction.
1.8 billion square
Yes.
feet.
And economic aspects of it, just see that, out of which 42% is running by more than 12 months of the delay. Think about 2,000 rupees average construction cost. This amount to 1.3% of our GDP. Now question comes is that the slowdown of the economy also has lot to do with the slowdown in the real estate. We haven't really constructed a lot of properties. And I'm seeing that there are also issues because of an investor cycle, because investors here are the trading. They pay you initial advances, and then they're not bothered much about it. So construction driven mechanism does not come. And that's what is also a big question mark in that sense of it. So to some extent, I do agree what he says that, but there are larger issues we have to introspect in ourselves and say that, boss, there are somewhere we're creating a problem. And I can't sit down and say that the country which is talking about 8 crore more homes and say that sentiments are bad, so I'm not selling.
Fair point, Pankaj. I agree with you. End user does not too much depend upon sentiment. I think it is about affordability. Amar, we have only 10 minutes left. So the last, sorry. Happy to take 5 minutes, Sanjay. So,
When you talk about housing, one important thing we need to understand is not that we are buying a new shirt so we can cancel that need. We can postpone it. But if you need a house, you need a house. And people will wait for maybe 2 years, 3 years. They'll wait for the market to correct itself, or maybe they'll wait and see if the market is not sliding further. And people who need a house, they'll come back into the market. And Pankaj, you mentioned that today the market is driven by end user. I completely agree. So when the investor is not there, those pockets which can be inhabited, which have the infrastructure, where the development is taking place, will get sold.
you can't indefinitely say that.
Our
So-
moderator has been waiting for 15 years and he has been able to buy his own admission. So it's not 1 or 2 or 3 years, it's when affordability happens. No,
So I can't buy an apartment that I want to live in. Absolutely.
right? So, sorry, I took cut you in. I'm sorry, I'm taking away a couple of you. But couple of things, and I think Pankaj has been pointing out to that. But the issue is execution. This execution is a problem. And even the more you delay, the bigger the problem. The overhang of debt and cost increases. The developers are not actually doing, probably, at least it's not visible, that you take the lowest hanging fruit, the most saleable project, you get it, or the nearest to delivery, you should take that up, put all your resources into that, deliver one, even if it is a lesser profit, or whatever best pricing you can get it off your books, sell it, it will create confidence, it will give you the capital to do the next, and slowly, I think, if people start doing it, the cash flow start coming. It may not be the healthiest balance sheet, it may not be a very profitable balance sheet, but the cash flow will, start coming in. It'll start, the execution will start rolling. People will get confident. People will start buying. That execution is happening, and there is a line of sight for delivery. People need houses. I agree with Sahil that there is an underlying need. Unlike NCR, where people, people use it as a boasting thing that, I own 5 or 7 or 10 houses in Delhi. But the thing is, in reality, outside of that, 99% of India is outside that. People need houses to live. And once, sooner or later, they will buy it. Yes, they may buy a smaller house, they may buy a little less than desirable house or whatever, in a B-grade location, or not B-grade, or a less optimal location or whatever, but they will eventually make the decision and buy. But today, rental also is actually to live on rent. The way the capital values and the rental returns are on residential, it's cheaper to live on rent than to actually invest in your own house. And even that is a market. Even if developers develop, they can't sell, at least the rental market will come in and eventually somebody who's renting may eventually buy. I don't know, but may not be the right answer, but at least they will start delivering some value. So cash flow is important. That's my view. I don't know.
I agree with you, Hardeep, entirely. And Amar, that's exactly my question to you as well. Hardeep very rightly pointed out, today living on rent is much cheaper than buying an apartment, which has, I have to pay an interest at 10% rate of interest and so on and so forth. Way back 2007, the delta between your rate of interest and your rental was very, very low. Today, that has increased significantly. One of the things that the government can do about rates of interest, about home loans, making it cheaper, making it that much more affordable, and so on and so forth. What are the things in your view the government should do or can do to be able to get us all out of the conundrum that we find ourselves in?
Okay, having heard a lot of views across the table and having seen a lot of what's happened in the market in the last decade or so, I try to give my perspective on how things are changing and how things can be viewed in a slightly different way also by drawing some parallels. See, we all know that market is in a spot, there's a lot of tightness, sales are not happening, prices are still there, land prices have gone up. So that is a factor, yeah, all these are major drawbacks in the system that have crept in, and interest rates remain high. Now, what I would like to also say is that various constituents in the market have evolved themselves and have made their strategies to come out of this imbroglio. For example, developers today, and I see this across the board in Bombay, Delhi, Bangalore, Chennai, the move towards smaller sized apartments, the move towards housing which can be done at lesser construction cost, the move towards better governance. And by better governance, I don't just mean the regulatory filings and the on the face of it, but even getting into maybe a 5, 10, 15% change in the spirit behind the way the companies are getting governed. For example, I speak to many promoters in real estate, and they're actually hiring CEOs and CFOs to deal with the external world, which is not what I would have seen even 2 years back. And that is happening in a few of the developers, and I see that trend picking up more and more as time goes by. So the desire to separate management from shareholding and so on. The way they are restructuring their operations, the way they are going about the entire construction, the project management, the resource availability cycle. And this takes me, the parallel that I look at is perhaps in the mid-90s or the late 90s, the Indian industry, the way it evolved, the Indian manufacturing sector, which was beaten down to death effectively in the late 90s, and the way they changed themselves and evolved themselves to being one of the resource engines of the world in outsourcing and manufacturing outsourcing in the early 2000s. So effectively, any period of prolonged slowness and pain leads to betterment for the industry, leads to much better degree of processes, much better degree of the way things are governed and run. And that's what I see happening in real estate. So this is as far as developers are concerned. As far as finance is concerned, which is where the world I come from. So till a few years back, there was debt and there was equity and nothing else. Now you have so many more choices. You have mezzanine, you have preferred, you have a small degree, but some growing degree of pure equity, and you have a bulk of debt providers. And on top of this, now you have apartment funding, you have various kinds of layers of funding available across the capital structure, which again shows a deepening of the market from a financier's point of view. So all said and done, the market is deepening, it's evolving, and it's going in the right direction. While we don't see things happening positively today, but given the way economy is expected to recover, given the way the overall GDP is expected to go up, real estate is only a derivative. It is not a prime mover of the economy. If the economy does well, it's only a derivative, and it'll pick up once the overall economy goes up. Till then, everybody would set the house in order, and things would go in a positive way from there onwards. From a financer's point of view, what I would like to see is more predictability in government policies, more degree of reliability in what the intent and actually what comes out in terms of regulation, and less surprises. For example, if we provide debt or equity to a particular project on the basis of some approvals, there's a reasonable probability, at least in the last few years, that we have seen that something new crops up, some new approval, some new legislation, which we were not even aware of. And as a result, what's happened is that the deal timelines have really got prolonged and elongated, because people now tend to become far more risk averse, far more getting into the nitty-gritties of approvals, into nitty-gritties of the actual development, and trying to see problems where possibly there are none, but trying to examine things with a tooth comb. And this has happened because of a lack of understanding, lack of predictability on government policies, and the way that they have been impacting developers. And this is also a reason for the higher IRRs that exist, or the higher returns that exist in real estate, because it is effectively rocky terrain. Only when there's more predictability, when there's more certainty, will the actual costs come down for developers. And that is what I would like to see going forward.
A couple of very quick points. I think, first of all, congratulations to Mr. Saraf. I think you made a fantastic point in terms of recognition that the developer community itself, obviously got carried away in the last 7, 8 years, overpaying on land. And unless that problem gets resolved, Of course, construction cost is rising, but you can't control the prices. And I think to some extent, at the risk of irking developers here, I think it's a pain that you have to bite a bullet, right? You took a decision, it was a wrong decision, you overpaid for something, you got to pay. You can't then look at the government and other places. To your question, Amber, what should government be doing? I don't think the government should be reducing interest rates or helping. I think you've got to inflict the pain for the industry to learn, for it to become stronger in the longer run. And it's in my mind, as simple as that. Second point, which is slightly different, is if you're looking at investors to come back into the market, what we are forgetting today is that a very different asset class has emerged, which is going to compete with brick and mortar investment. It's the investment into startups. There are a number of people that I meet who are, who 5 years ago used to talk about which flat they should put in, versus now where people are saying, oh, I've invested in this startup, and small investments, small ticket sizes, 5 lakh idhar, 10 lakh idhar, 15 lakh idhar, and a multiple of those, because some of them would hit a Series A investment or Series B, and then they'll make money on that. And that is a very important phenomenon that's happening in the market, which is investing into the startup economy, right? And the third bit, again, ending a bit on a positive note, that if you look at the improvements in economy, I think the commercial real estate absorption is a very good barometer of what's about to come. And if India Inc. has started absorbing 35 to 40 million square foot, 40 million square foot last was absorbed in 2007, right? If India Inc. has started absorbing 40 million square foot, the prognosis for the economy over the next 3-4 years remains great. I think we've got to just sort the residential mess out and come out of that. There will be pain, no doubt about that, in that particular sector. But I think overall, the health will improve in the economy.
Thank you, Anshul. Guys, time's up. So I'm very quickly going to conclude. So some of the things I agree with Anshul, but some of the things I don't. I think bulk of the problem lies in the growth rate of the economy, the GDP growth. We've seen 2006, 7, and 8. The problems that we're talking about today, the same problems used to be there at that time as well. People were overpaying for land. Prices were going up significantly, 30% per annum and so on and so forth. But people still could afford it because they thought that tomorrow is going to be better, that their own growth rate, their own personal income will grow going forward as well. And I think that's the conundrum that we find ourselves in, where the developers on this panel certainly do not know what to do, how to get out of this imbroglio, as Amar put it. But I think there are certain things which the government can do, and urgently too, in my view. I think the two things that I worry about, that I think about, are, it's taken us 30 years to give a stable majority government in the center. Nothing short of a miracle in a country which is as diverse, with different points of view and opinions and so forth. It is a miracle, proven by the fact that it's taken 30 years for us to give a mandate like this. Is it really, therefore, unreasonable to expect a miracle out of this government? That's point number one that I wanted to make. Point number two, we've had 7 to 8 years of policy paralysis because of the previous government and so on and so forth. This government now, with the majority that it has, needs to act urgently because it has to make up for that lost time. If we still have a 10-year view, 7 years gone, 10 more years, we are going to lose a whole generation. And therefore, there has to be urgency in what the government is looking to do. I very honestly and very sincerely believe that the government can pull us all out of this scenario just by virtue of increasing the growth rate of the economy. There are things that one can do to increase the growth rate. The affordability that Pankaj talks about, if the interest rates come down, and now is the time to bring the interest rates down. Look at the oil prices, look at exchange rate, look at your, the whole economic scenario in the country is all set for a much sharper decline in interest rates. You bring down the interest rates by another 100 basis points, that house becomes that much more affordable because of the EMIs and so on and so forth. So I think there is some urgent action that the government needs to take to be able to get us all out of this conundrum that we find ourselves in. We have a lot of hope, and now is the time. If this government can't do it, then I don't think it is possible ever, at least in our lifetimes. With that, I wanted to bring it to a close. We don't have time for questions, so we'll take them offline. Thank you very much.
Thank you very much, sir. But before you gentlemen leave, may I request Mr. Tompkins to please come up on stage and present mementos to all our speakers, our panelists here, beginning with Mr. Anil Saraf. Mr. Amar Mirani. Mr. Anshul Jain. Our moderator, Mr. Ambar Maheshwari. Mr. Hardeep Dayal. Mr. Sahil. And finally, Mr. Pankaj Kapoor. Thank you very much, gentlemen, for sharing your thoughts and views with us, and thank you to our